Good afternoon, everybody. Good afternoon. Hope you're all doing well. If I get a quick sound check, please, guys, that would be great. Awesome. Amazing. So I hope you're doing well, team. Good to see you. I've been watching the numbers like a hawk this morning, all in anticipation of hearing the big announcement, of which there hasn't been one yet. I'm sure you're all watching on your own monitors and stuff, keeping tabs on things, but yeah, there's been no announcement yet. I imagine with the lack of an announcement about it, that the swing states, obviously Pennsylvania, and the others, Wisconsin, I can't pronounce that one, Wisconsin, and the other two, the numbers have been very, very close. Otherwise, there would have been an immediate announcement, so they can now, if it is what I think they're doing, they'll be doing a recount of the votes, which may take some time. We don't really know what's going on behind the scenes either, of course. But there's not been a clear announcement, so there hasn't been a landslide win in either direction. This is very, very... I mean, the markets will really, literally holding their breath at the moment. We may still see some relatively decent price action. Obviously, things will still move, but they will be holding their breath. When the decision is made and when the announcement comes out, at this stage, the more time that passes without an announcement, I imagine the larger the move in the markets is going to be when an announcement is made. Looking at things like gold, we need a 15-minute time frame here. So yeah, looking at things like gold at the moment, we haven't really seen anything. It's been like Monday all the way through Monday, early hours of Monday, late hours of Monday, into Tuesday so far, all day so far today. It's gone nowhere. Not done anything at all. We've had a 0.1% change. If we look down at some of our dollar primes, for example, like dollar yen, for example, it's done nothing, gone nowhere. We did have a bit of a rally, actually. From here, we rallied from 151 up to, what was it, 150 up to a high of 152.50. So that was a very gradual move, and now we've just kind of flattened out. It's not really done anything. It's not really moved anywhere. If we look at the Euro USD, our biggest contender, we've had this move, which was today. Yesterday, we had the move down. So we haven't really seen much of anything from the euro dollar yet either. And finally, if we go over to our stocks, S&P 500, NAS 100, US 30, Dow Jones, we've seen absolutely bollocks all. It's been incredibly slow. Yesterday was not great. Did pull a singular 1 to 2.2 out of the US 30 Dow Jones as per the trading plan from yesterday's session. It was the only trade that triggered, and it was taken off of the break close retest bar. Where are we? Let's see, Dow. Yeah, break close retest area here. So it was this candlestick. That was my trading candle in the afternoon. That one single bar. So yeah, it wasn't great, guys. It really wasn't. It wasn't great at all. So at the moment, we're definitely seeing things slow down. Now, if we check out the equities are really in a bad state of affairs at the moment. So nothing's really improved. It's only gotten worse. And there's going to be a lot of fear. I'm not going to go around the same thing I did yesterday. Nothing's really changed. But we are just seeing the continuation of things slide and remain at current levels as a result of the indecision from the political scene at the moment in there. And I assume these things will all be quite erratic and explode in certain directions and stuff when we find out what's going on. So looking ahead then, I mean, like I said yesterday, folks, there's not going to be any forex trading done at this stage. Going to be a 48-hour break. I will resume if there's still no announcement by tomorrow. I will resume the forex trading for the fund, so there will start to be more forex exposure tomorrow moving forwards, but there probably is going to be a slight risk adjustment in terms of what instruments we're specifically looking at. I may avoid all US dollar trading and focus on commodity currencies in particular and pound currencies in particular. I probably will be avoiding the Swiss and the yen as well. These are just initial views. I haven't made my final decision yet, but I believe that's what I'm going to do for the safety of the fund and for the safety of everyone who follows the fund. So that's probably going to be my train of thought right now. In terms of commodity trading, I will be avoiding gold at all costs. So no gold trading whatsoever. I will be participating in UK Brent again and opening the doors back up on that. Also natural gas and corn as well, if anyone's interested. But as for today, we are going to give it a miss. Today is a really, really hot day. Okay, really, really hot day in the market. So we're just going to be focusing on the stocks. We can definitely check out some of the FX instruments from an analytical perspective, or check out gold as well from an analytical perspective. But again, no actual trading is going to be taking place in any of these assets. So we'll start off and clear down the US stocks. We'll include the S&P 500 today as well. So first of all, the S&P, NAS 100 and Dow Jones are at a complete snail's pace. It's total standstill. We did have a dip down, which really kind of got off to a good start, probably about 4 o'clock in the evening, which is when my only trade idea of the day actually ended up taking place. The breakout itself yesterday was extremely poor. We did not get any kind of decent trading volume whatsoever until much later in the day. And we actually came down, dipped our toes below the point of liquidity, and actually came swiftly back up yet again. This is a fake out that we noticed yesterday as well, down here at around 4:45, 5 o'clock. And then, as I said, we've come back into our trading margins, and we've remained here ever since. Now, in terms of the econ today, we have Tuesday balance of trade for the Canadian dollar. That's obviously coming up in about an hour. And then later on this afternoon, we have the ISM Services PMI. RBA interest rate decision, by the way, came out at a non-surprise 4.35%. So there wasn't really much to report on that per se. But the ISM Services PMI this afternoon, looking at a decline in ISM Services, is probably going to be, how do I put this? Maybe like a 4 or 5 out of 10 in terms of market impact. So in terms of like if we had a visualization of a market impact scale, we would maybe see that the market impact being a 5 out of 10 from the ISM this afternoon. In terms of the assets that will be affecting the majority of, it will be directly relevant to the US 30 Dow Jones in particular, and possibly bleed out into the S&P 500. The NAS 100 really should be unaffected, but obviously due to ETFs, you will see the move bleed out into the NAS as well. But if you want to trade it, if you're looking for that additional fundamental volume to push an instrument somewhere, then the US 30 Dow Jones is going to be the one to go to, or the S&P. So I'll leave that choice down to you guys. And that's pretty much it. We then go on to the IV PMIs tomorrow. So that's pretty much it for this afternoon. So US 30 Dow Jones at this stage, then we can see it's, as I've said, real snail's pace at the moment, not really doing too much of anything. We've got a potential floor that we can work with, and that's in there, in this area. The base of the move before we had the big buyback, the big institutional buying like sort of session, was actually here. So this is representative of the beginning of that move, therefore really the point of liquidity that we should be utilizing. But at the moment today, we haven't seen any kind of impact to that whatsoever. The market has really been bottoming out at around 41.7820, which is a fair shout away from where we are at the moment with this floor. That being said, it's probably safe, I would say, to still use this. So if you do want to consider going long, a rejection from this area and not that one is probably still going to be the wisest choice. Now, if I think about a sort of area to use as a roof or a ceiling, as I like to say, of the structure, then that's going to be the ceiling. And we've been trading up against the ceiling for quite some time. So then our trading margin for the day becomes these 2 points here. And so we'll be essentially utilizing this as best we can to figure out our longs and our shorts, something like that. So breaker structure point for this one is then going to be this area that we've already indicated is a point of the floor that we've seen today. So if price action comes down and dips its toes into the big point of liquidity down here, then I will be looking to take a long between this point at 41,788 to this high at 41,871, and that will be the trading margin for the longs. For the shorts, the trading margin, relatively the same, is going to be the break of structure below this area in here. And just so everyone's absolutely clear, because I know there might be some questions around why that is the break of structure point for the shorts, is essentially because of what's going on in here. Because high, 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 all these highs, and it finding there's a little bit of a ceiling. When we do finally break above, we have a retest of before continuing. So I like this level. It looks like it is a level that is utilized by price action on the more, what do I say, sort of, close side. I can't remember what the word is now. It's gone. But that is the area that I would be. It's an intricate level. It's an intricate level that is utilized by the intraday price action at the moment that I would like to use as my breaker structure point. So, for example, we just had this breaker structure, and so therefore we would now be short with our target profit at 41,756. Obviously, we're not going to take that trade right now because we're not at the market open. These trades are only accessible when the bell rings, or after the bell rings, most importantly. So that's going to be the setup for the US 30 Dow Jones. Now, if you want to go long above this area, it is a break, close, and a retest, guys, okay? So it's a full breakout, retest, and then a continuation. You want to see the retest of this one because this is a big point of liquidity. Now, in terms of target profits, we're not really going to be looking at like this area up here, for example. I just think that's way too optimistic given the geopolitical climate that we're currently in. Political, specifically for the US, obviously. But I just think it's way too optimistic for where we are at the moment. It's too dangerous to have TP up there. So we'll be going something much, much, much closer. And that's going to be at this point here. We see this low, comes down, get the big bounce, bounces back to 42.082. And then it has this big sweeping move down. Now, if we run our sort of arrow across, we have these highs as well. And if we continue running across for the price line, we have these two major lows. And we have this high before the rebound. So now we've built up a picture here. This is the bottom of a point of liquidity. And so therefore my target profit is going to be like so, at around this level in here. Now this margin here is pretty much the same as the margin we have to utilize below, maybe a tad bit smaller. But on a 1 minute time frame, regardless, that's going to be absolutely perfect. So I'm just going to run my level through here, just like so. And that's going to be my TP. Okay, so this is the trading margin for the break, close, and retest above for the long. So that's pretty much what I'm looking at for the Dow Jones. Now, if we're looking short the Dow, frankly, guys, I'm not going to be short at all. So if the market does break down below this point and continues, then I'm just going to let it go. And that will be that for the day. Okay, so let's have a look at the NAS 100. So NAS 100 at the moment, kind of a similar setup. We've got the floor down at the lows here. We have, of course, the ceiling, which is this one up here. So the margin on the NAS 100 is much, much wider than the US 30 Dow Jones. Just simply because of coincidence. There's nothing more. But also because of where we are at the moment and having such a larger margin to utilize, we're going to have to break this down because, again, it's Tuesday. Not only is it just Tuesday, but we have such significant events taking place in the markets at the moment, around the markets that will affect and shape the markets. We don't want to leave our exposure open for too long. We want to break this down because we want to be in and out of the market in a good amount of time, so we're not going to get caught with our pants down. Nobody likes getting caught with the pants down, do they? Right? So what we're going to do then is look to break down the lower half and the upper half. There's not going to be any trading done in the middle. So ultimately, we're looking at the short from the highs, long from the lows. The median, to break this down into two halves, generally being right in the middle, but sometimes it is a little bit off-piste. The price line, where it is at the moment, is actually pretty well representative of a median. It's not perfect, but it is good enough. Rebound, multiple retest stages, retest, 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 rebound, retest, 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 retest. So it's nicely utilized. Good enough for us to be able to break this down into the two halves that we're looking for. So then the long is going to be a breaker structure above this point here. Okay, nice clean breaker structure. Yeah, we got a TRF there, don't worry. We are aware of that one. But breakout volume, we're hoping to clean that through anyway. So the long is going to look like something, something like this, for example. The breaker structure for the short is going to be, where is it going to be? I think that area in there. So slightly wider breaker structure for the short, but that's fine. And then we're going to be short just under that. Target profit down at the lows, and of course the stop loss, which is going to be probably about there. So we've got a 1 to 2.1 on one side, and we've got a 1 to 2.44 on the other, which is, again, that's not too bad, is it? Not too bad at all. And then, of course, we have the S&P, the Standard and Poor's Index. And this is extremely similar to the NAS 100. I would say much more so than the US 30 Dow Jones. The only difference with this one is price action is currently trading more closer to the floor than it is the ceiling, and not in the median. This does open up an opportunity for us, though, because hopefully price action can come down to this level, and then we can go long at the market open. Obviously, pigs don't fly, do they? And that's kind of what we'd be hoping for by saying let's wait for the move away from there. But this point in here seems like a really nice area to consider going long up to the high there. I would be a little bit worried about the exposure, the time to price ratio, and how long we would be in the market in order able to achieve that 57.70 area. But I guess we could look at partials being taken at this area in here, for example. Yeah. Well, I'm just the only reason I hesitate and I pause here is I'm actually thinking, could that be the trade? I think it could, couldn't it? It's a strange place to trade, I must say. I mean, it's not something I do often. But it is the range, I use that term lightly here because we're not really in an established range yet. But that is a good enough trading margin. Let's have a look at this on the 1 minute chart. Yeah, I mean, that's easily a nice trade, isn't it? So what we'd be doing is looking for the BOS. The structural point is in here. I'm just going to take a minute, guys. Do you see? Does everyone see? And I don't want to, if you don't, then please just say so that I can explain it. But when I pick out these places, do you understand why? And let me just unsquish that. So you see, I'm going to highlight this in bright green, so you all know exactly what I'm talking about here. Okay. So do you understand why I've utilized that area? Or is there any confusion about that? Because I pick these levels out for you guys to utilize all the time. I don't get many questions about it, so I assume that everyone's absolutely crystal clear on why I'm pulling them out. The zones of 1, okay. Ian, what about you, mate? And we'll get onto the daily one in a minute, James. That's no problem. We'll cover that in a moment. You're getting your head around them. Okay. So you're getting your head around them, but do you have a broad understanding of when I pick these levels to trigger trades from? Do you know why? Could you explain it to a child? You know, that's the best way. If you're able to explain it to a child, then you get it. You get the breaker structure. Okay. All right. Cool. Okay. Good. I'm just double checking, because I understand when people are in a digital environment and where you're kind of listening to a screen talk at you, it's these things can go sometimes amiss, and I want to be sure that my traders here are getting absolutely what they need to understand what's going on. So don't take it personally. I'm just double checking. So we all have a good understanding. So the reason being here is because of the fact that price action is having an adverse reaction to this level. When we are above it, we are bouncing. When we are underneath it, we are pulling away. And so there is something happening behind the scenes here. So at this level, there has to be institutional interest. And I'm not saying it's buying interest or selling interest. I'm simply saying to you that there is institutional interest in this level. Look at this move here. I'm just going to pull this one not out of thin air, but like pull this one for a case study. Okay, so look at this for a case study. We have this big push away. We come back up, and look at what happens when we come up to it with the wick. We wick up and then instantly come back down. So you imagine this is a full-bodied candle pushing up into 57.36, and it closes as an inverted hammer candle. Now, I'm not really big, and you will understand this over time for those of you who haven't followed me for forever. I'm not really big on candlestick patterns. I'm not really a fan of them. Some of them I will call out, and that's absolutely fine. But generally speaking, I'm not. But an inverted hammer candle or a hammer candle is a good one because it does indicate the price action's had an interest of something. There's been something that's happened that's made the price quickly pull away or rally up to. So all we know is what we have the information to in front of us. We know for a fact that institutional buying pressure began here, and we know for a fact that institutional buying power ended here. Now, what comes after that is a big, deep, significant sell-off. Okay, we're not talking about days and days and days of bear market territory, but we are talking about a 1 minute trade that would have yielded great results for a short. So we've had these big, extended, full bars, which have pushed down into a much bigger pot of liquidity below. And this is where it begins. And so what would we think is up there? I know most of you guys know this, but I want to hear it anyway. So what do we think is right at the top there? Just based on not common sense, but based on what the chart's telling us. Yeah, that's right. There's a shitload of cash there, isn't there? But what kind of money is it? And I'm teaching you that I feel like I'm teaching you how to suck eggs a bit here, but just so we're absolutely bloody clear, what kind of money is it? Which way is it? Which way is it? It's the short cash, isn't it? Yeah, it's the short cash. Yeah, it's institutional money, definitely. It's short cash. So we've got a ton of short cash orders here, already in the market. Remember, institutions cannot execute in market orders. It costs them too much. So they have to place their money in the markets before the market is reached there, which is exactly how I teach you to trade. Exactly the same way. And so the institutional money makers have all of their shorts in the market at 57.36 and 57.37. This space. They've got all their orders in there. So when the market comes up to a point like this, bang, it instantly triggers the pendings. The market dips away quickly, and boom, we have the big sell-off as a result of it. And then we have the same thing that repeats down here. It bounces from this level. We come right back up again. And look what happens here. This area, these moves, okay, one didn't go as far as the other. Okay, I'm not saying it did. But these moves are identical. They're absolutely identical. So we had one, we've come right the way back up, we get a perfect double top. And it wicks in, it pulls back down, but this time the candle doesn't close further down like it did here. Which means that the pending orders that were triggered here, which are now out of the market, we've got back into the market, but there's not as many shorts anymore, is there? Because most of them got triggered on this one. So more orders got short here. The shorts come down, they reach this area, and then it turns, and it comes back up and it starts to grind. There is another factor, of course, here as well. The elephant in the room is the time. At this point here, it's 2:30. That is yesterday's 2:30 candle. Okay, the bell rings. So bang, market comes down. We get those orders in, the market comes down, we come back up, and boom, now we're at almost 3 o'clock. Money's run out. So then it starts to do its grinding thing. And it grinds until the evening. The US markets come back from their lunch break. We're now talking about 4:30, 5 o'clock. And then we start to see better trading volume again. So that's kind of besides the point now. I was just giving you the natural life cycle of the day's stock trading. But that's exactly why we are looking for those breaker structure areas. And this is exactly how I go around calling them like wildfire on a regular basis. So I'm just going to refer that back to this area in here. Okay, so breaker structure point is going to be there now that we know exactly what we're looking for and what that is. So the long is then going to be the break above that, the target profit at the next zone above, and of course our also nice stop loss. Stop loss is going to be naturally well below the breaker structure point because we've seen the breaker structure point protect price action from falling quite a few times. It's not been impervious to the sell-offs, but it's done a pretty good job of it. Now, in an ideal world, we would try and get the stop loss as low as possible to account for as many zones as possible. So, for example, we could put another zone there as well, because that is the beginning of a big price action pullback. So maybe at a 1 to 2.47, we would be better off having our stop loss down at a 1 to 2.1. And then we would definitely have nice protection inside the stop loss. So if we get a breaker structure for our long, we're going to have a good chance of this trade being successful because we have multiple layers of defense inside our stops. So the same can be done for the short as well. We'll be looking to short this breaker structure point. I would actually be more convinced of using an ascending level for the breaker structure for this one. So if I have an ascending level to there, and then probably utilize, I don't believe that is a point actually there of that one. So that's the floor of these moves, isn't it? So yeah, so that's good. So I would be utilizing this area in here then as the breaker structure for the short, which is quite far down. But looking at this chart, when we zoom in, I think this is a trade idea that could easily be done and dusted in the space of a minute or two and still yielding very nice results. 1 to 2.25, that'd be a 0.55 return. So yeah, so that would be the short, that would be the long. Right, so we've now got the NAS 100, the S&P 500, and the US 30 Dow Jones, all mapped out, all ready to rock and roll, with the breaker structure levels and our trading margins for the day. So let's have a quick flash up at oil. 15-minute time frame. I haven't forgotten about you, James, with the dailies and the wider zones and the breaker structures and points of view like that. So we're going to do that afterwards. Spot Brent oil at the moment, I mean, honestly, it's not actually looking that healthy. It's probably not too much here I would focus on right now. The structural point for this one, the ceiling, is there. But unfortunately, we've got this low down here. And that's the base of the M reversal that we had. See this M reversal? It's a bit scatty on the 15-minute time frame, but it's there. right? So that's our M. The midpoint of the M reversal is here, which then doesn't align with anything that's going on here. So it's a little bit confusing about where to go. What I would think is that on an intraday perspective anyway, we have this point of oil, which would mark the intraday low. And then we have the midpoint from the M reversal, which would situate us about there. And that would be our intraday trading margin for UK Brent. So then if we want to go long or short, we have to wait until the market does indeed either come up to this area and reject or come down to this area and reject. We wouldn't be looking to trade either side of this because the margin is too tight. We can still have this in our charts as a visual representative of the median of the trading margin where not to trade. You know, if the market comes down to this area here or up to this area here, we don't want to be taking the trade, right? This is essentially, this is essentially our no man's land. But we're absolutely fine trading from the, right up at the highs or right down at the lows and then riding it out through the middle of the no man's land. Right, let's have a look at some daily perspectives for structural points. So let's go up to the daily time frame. Let's pick a random pair, NZD yen. Hopefully it's not going to be a difficult one. It looks absolutely crap, so there we go. Always like throwing myself in at the deep end. So New Zealand yen at the moment, significant consolidation. I mean, this is a chart of price equilibrium through and through. No sign of positive or negative imbalance being reached on either side of the market for weeks now. I mean, we're going back to September, right? Months then. We've got a price ceiling and we have our price floor. Now this floor there's a lot to be desired about it. I mean, frankly, we haven't actually been to the floor of this since the 16th of October. Market's currently trading here, 5th of November today, and we still haven't actually been back down there. But that is, regardless, it's going to be my floor. Now, in terms of looking at daily breaks of structure, if you do want to go down the route of daily swing trading, you are going to be looking at, and you probably guessed it, the exact same thing as the 1 minute chart or the 15-minute chart or any other time frame. So for example, this is the daily margin. Now, can you see, and I would like you to shout it out, any level in there, in this NZD-JPY, that has had an adverse reaction to price action? Not necessarily adverse, but let's say, can you see any area of interest, a POA or an AOI, whichever you want to call it? Point of interest in this price action. Give me a couple of shout outs. Okay, where the price is now. James, you say where the price is now. What about anyone else? Was everyone agreed? That's absolutely fine. If you do agree. 91.20. Let's go at 91.20. Yeah. I got you. 91.20. So like 91.20 would probably be the floor, right? So if I looked at the top of the zone for the breaker structure, it would probably be like there. And then the bottom of the zone would be 91.20. Agreed. I do agree with that. So then that becomes the breaker structure. Because this is a point where price action has struggled to clear. So that we know if the price action were to come up to the big point of liquidity above, i.e. this area in here, and reject that and then come down to clear 91.20, the chances are we would probably be going straight down to the ground floor. So then it's the exact same thing all over again. We're looking at the TP, stop loss, target profit on the daily, 1 to 2.5. In fact, on this daily chart, we'd probably be looking at a 50% pullback between these two margins, and that would probably be a 1 to 3 instead of a 1 to 2.5. And that's how we would do it. Now, if we're on the short side of this and we're looking for a break of structure point, things get a little bit more dicey. It's a little bit more hairy here. But then you have to start utilizing areas like this, for example, in here. And areas like, well, to be honest, it's the same one, isn't it? It goes across. So then if we look at that area in there, there's a lot of lows in the market. But what I would do is I would have to filter, use a sort of mental filtering process of looking to see where the most lows have come from. So where is the area that most of the price lows have been bottoming out? And generally this will be the bodies of the candlesticks, not the wicks, which has always been a similarity with breaker structure points. We're going for the sort of the zone being the body of the wicks, not the body of the candle, sorry, not the wicks of the candles. So then at this stage, we're looking at kind of this area in here, which makes this point make perfect sense because we get a breakout above and then the retest of it and then the continuation up to our big point of liquidity up at the highs there. So then this becomes the bullish point of breaker structure, which means if price action were to come down, push into liquidity and then reject it, we would then look at the trade long up to that TP with the stop loss there for a 1 to 3 as well as it happens. So these are kind of two identical trade ideas based on this trading format. But once you've set the daily levels, I struggle looking for the breaker structure on the 15 minute. On the 15 minute, once you've set the daily levels. Okay, let's restart the process with a different chart. Let's go to pound Swiss. Oh, look at this. That's an absolute beauty. Okay, so I would say it's probably going to be even more difficult than the damn NZD. Yeah, definitely didn't mean to do that. Right, okay, so we have, of course, the ceiling of price action. Now, for this one, I mean, this is a particularly difficult chart to try and ascertain, to be honest with you. And there's not going to be trading parameters in every chart. That's just the nature of the game. But I would say that the floor is probably going to be here. All right, so that's going to be the price floor for the daily. And the ceiling for the price daily is going to be about there. Now, this is not nice. This is not pretty. I don't like that. But at the end of the day, that's where recently we've had rejections. So that's going to be my two daily points of liquidity. I'll be focusing primarily on the last sort of month, I would say. So I say last month, not 4 weeks. I mean like literally October so far, so the last week or so. So looking at this, actually no. Yeah, it's a few weeks. There's a few weeks in there, isn't there? Yeah, there's a few weeks. So once I've marked out the highs and lows, I then go down to the 15-minute time frame. And this is the price action that I'm seeing at the moment. Okay. So in fact, the pound Swiss has actually been in a pretty volatile and ranging market state structure. So then once I'm down here on the 15-minute time frame, I'm then going to focus and I'm going to go through the chart here. Let's just make this as large as possible. I'm going to focus on areas that have seen consolidation around the low point of the range. So I'm just going to highlight these green. This area in here. To be honest with you as well, actually, thinking about it, probably in that area there. Okay, so now I've got all of these individual points in price action in this range at the moment here, down at the lows. Now for the highs, we haven't had a great deal of interest in the high, have we? But I am still going to do the same exact process at the highs as well. After this has to come at the point where price action has pushed into liquidity. So one there. I'm going to discount that because that's not really pushed into liquidity. This area in here, this area in here, and that's it. So we've got 3 above. We have a lot more down below. So can anybody tell me any similarities between these parts of price? these parts of the lows are parts of the highs. And I am coming to a point with this. So looking at this chart at the moment, anyone notice any similarities about the price action at these points? Consolidation, yeah. Anything else you want to add, Scotty? Struggling to see it. Yeah, that's all right, mate. No, that's fine. The chart is scrunched up. The chart is scrunched up. I'm trying to fit a great deal of price on the table. So if we zoom in here, we have a look at that. And they pretty much all look like that. Consolidation above it, dips down into it, and then springs up. Yeah, so basically what we're seeing here is we're seeing areas of price equilibrium at the point of entry or just after the point of entry of major points of liquidity. So do you recall that over the months and stuff that we've been doing this and you've been learning all about this method of trading, that I will often utilize the analogy of a plane flying and then refueling at the station before taking off and flying to its next destination. So if you imagine you're a plane, right? Love that wing. There you go. That's your plane. Your plane's flying. It's not crashing, don't worry. Your plane's flying. And it comes to this area, right? Comes to this area, and then it has to refuel at the station. So then it flies, and it refuels at the station. And then it takes off, and it flies to its next destination. And then it lands, and it refuels, and then it takes off, and it flies. And it's going and going and going and going. And then it lands at its destination. And it refuels, and it takes off. And it lands at its destination. It refuels, it takes off. And it lands at its destination. It refuels and takes off, and so on and so forth, and it continues going, right? So that's the analogy that I will often use. Mate, that is an amazing airplane, I'll just have you know. Thank you very much. But that's the analogy that I use, and I think, if I don't say so myself, I think it aptly explains exactly how things are moving in the markets. So back to the main point at hand then. What is the breaker structure? How do I place that with big daily wide zones? Well, the big daily wide zones, these are the points on the outside of this range. So we don't need to worry about any of that moving forwards. They're already done. So now all we need to do to get the 15-minute ones, let's go back to having gray, not green. Delete, 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 and I'll just go along and do that in time. The breaker structure point is going to be at the top of these levels of consolidation. Zoop. Zoop. So that there, whoops, is going to be what I would utilize as a breaker structure point for a long in this chart. And the one that I would utilize for a short is going to be at the bottom of the zone above, which is going to be that one. And now, can you see, after we've placed those two zones in, I don't know about you guys, but I would think that looks, I think it looks bloody clear. Like it looks ridiculously clear now. Like they were supposed to be there all along. So now we have our long breaker structure. And we have our short breaker structure. And also what you can do once you've done this is you can say how many times has price action stopped me out after I've utilized this as a breaker structure point. Well, I can tell you straight away, if we were utilizing these, we would only have 2 TPs achieved because we've only hit the level of liquidity above twice. But we would have never been stopped out. We would have a 100% success rate of trading this instrument. Now, of course, if you were trading the 2 margins in between, you would have had a shitload of wins. But we're not, and that's not the way we do it. We're always looking to see the price reversal from a major point of liquidity, not a minor one. And so therefore, we would have only have hit 2 TPs for the longs. We would have hit maybe 1, 2, 3, 4 TPs for the shorts, but we would have had a 100% success rate at doing this. Yeah, I think I was aiming inside the daily zones or very close. No, the daily zones, think about the daily zones as a couple of, I don't know, man. They're just walls. Like, you remember the old Atari? And you used to play ping pong on the Atari? And you had the walls, the little balls bounced off. Think about it the exact same way. Simplify it in your head. Don't think about it, if it's too complicated to think about the complexities and the market dynamics side of things with all the, pending orders and limit orders from institutions and stuff like that. Just think about it like a game. Price action is the ping pong ball, and the walls either side of it are the walls that it bounces off. And all you're doing here is you're just looking for those intricate little levels in between them to say when the ball's ready to get going. Yeah, no worries. I get it. Yeah, I get it. Now, not every single chart is going to be exactly the same, of course. We all know that. Every chart differs. But this was a particularly difficult chart to do because of the nature of the daily time frame and what price action's been through at the moment in this one. I mean, it's bloody awful. It's nasty. But it can be done on anything. As we have just seen today. Okay. So I'm going to wrap things up there, guys. If you don't have any further questions, I'm going to call it a wrap on that one. I hope you've appreciated the slightly more educational-esque session today. Make the most of it. Obviously, it's been recorded and will be uploaded to the tube, so you guys can get back to it and rewatch it as many times as you like. And yeah, have a good session this afternoon. You've got about an hour and 10 minutes, I would say. So grab yourself some lunch or whatever you need to, and then you can get to the US Open this afternoon. Hopefully we can pull out a couple of wins. But have a great day, guys. It's been a pleasure as always. I look forward to catching up with you later on this afternoon as well. And yeah, look forward to catching up with you in the live session tomorrow. And I'll see you then. No worries, team. All right, take care then. See you then. Cheers. Bye-bye.